Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. We have a lot to talk about today. In today's video, we're going to discuss how to find the easy trades when the market is really chaotic. We actually had a comment by somebody yesterday in our boot camp in reference to having a great morning yesterday and everything lining up perfectly, coming back a little bit later in the afternoon, and the market just hitting the floor, for lack of a better way of putting it. So we're going to talk about that. We're going to talk about breaking down the market. We talk a lot about the stock market power pyramid and how you work your way up. What we're in now is a little bit different tape from where we were even a couple of months ago, where pretty much everything was going up and it didn't matter what you bought. Well, you know what now? Now you need to be looking to buy stocks that are obvious. And one of my original trading mentors, his name was Joe Blazy, way back in 2001. He had a very good quote, and this is something that you want to write down. If it's hard to find, it's not there. And once you start to really drill that into your head, it's easy to be patient because you're not throwing money away, but then it really forces you to build a structure to find some ideas that make sense and are worth accepting risk on. So we have a lot to talk about. We got a bunch of stocks we're going to talk about buying today. We're going to break down sector rotation, and we're going to talk about a stock that has less than perfect order flow, but something really interesting happened yesterday, and we're going to take a look at that. We also have an upgrade on a really popular stock ahead of earnings. Right now, it's trading at around 110, and the upgrade that came out is up towards $127. And a big bank actually yesterday put out a suggestion to buy the dip ahead of earnings. So stick around. Be back in just 1 second. We have a lot of stock talk today. All right, hang on just 1 second. Okay, so obviously with everything we do is for educational purposes. It's up to you to make that final decision, but it's up to me, my mission to help you make better decisions so you become the reason that you're making money. So we're going to start out today. I just want to talk about quickly, there was some news on Facebook today that I think is pretty interesting, and I'd like to get everybody's opinion on this. This is kind of interesting. What do you think about Facebook now starting to get into an audio hub for podcasts? That's actually pretty interesting. Where you can actually start to go into your Facebook feed now and find all your favorite podcasts. I guess that they're trying to fight back against Apple and all this stuff with Apple, with hiding their cookies and all that kind of stuff. I think Facebook needs a little bit of good news right now, the way they've been getting crushed in Washington. So we'll see if that affects the stock at all. As far as how the stock is actually trading, we're getting a bunch of questions about Facebook right now. Is it okay to start buying the stock? And we brought this question up quite a bit recently. Once you start to work your charts, and if we start to work the chart here, even just going from earlier in the year, you can clearly see that the order flow broke a couple of times, but still found pretty good spots to get long. Now the order flow is broken, and you can actually see this. If you know a lot of what we talk about, and I'm going to zoom this out just a little bit and make this a little bit bigger. Let me get the volume off of there so it's easier to see. You'll know a lot of what we talk about. We're looking to buy stocks. We're looking to push up and pause, and that kind of validates what we're looking at and gives us opportunities to feel a little bit more conviction because the smart money is dipping their toes in, pausing, and then doing it again. Now, what we're kind of seeing here at Facebook is the opposite of that. We're actually seeing a push down and a pause, a push down and another pause, and now we actually pushed down again yesterday. So for me personally, buying Facebook stock, very similar to a lot of these other stocks, such as Peloton, I'm not ready to start buying the stock. It's very dangerous to say that just because it was a much higher price recently, that doesn't validate a reason to buy now. Remember, our job is to piggyback the smart money. Our job is to say, wow, look at what they're doing. Let's go find a spot to hop on that train. Right now, as of this moment, Facebook still has bearish order flow. So until I see somebody with really big, deep pockets turn this stock around, at least for 1 day, never mind for a week, I'm still kind of hands off on Facebook, but that's actually been the case for a couple of weeks now. It's very hard to fight that big bearish news that they have. But let's talk about an opportunity to possibly look for a stock to buy today, which is, let me actually get that off the screen, which is Starbucks. Starbucks actually got a pretty decent upgrade. If you weren't trading Starbucks earlier in the year, by the way, James Cusano, thank you so much. I really appreciate that. By the way, I just want everybody to know how grateful I am that you're here with me every day. It means a lot to me. It's 7:30 in the morning. You're really showing how much you want to be a trader and how much you really want to go for it. If I'm providing you value, if you could do me a favor, smash that like button and hit the subscribe button. This way, you make sure you get updates. We're going to talk about Starbucks today. If you haven't traded Starbucks this year, we actually traded it quite a bit prior to earnings, which was right over here. We actually had earnings come out, rocket up into earnings, and the stock has kind of been, I guess you would say, in the doghouse, but it's kind of holding the support over here right now. And you see the upgrade by Deutsche Bank. They actually said that they're looking to reestablish the $127 target on Starbucks right now, which basically means that's roughly a 14 to 15% move to the upside from where it is now. And they're basically saying they're looking for it to attack all-time highs. So how do you get involved in the stock? And this is actually a really, really big conversation that I have with people often. And this is an argument basically that I have with people. So here's the two concepts that I want to get across to you, because it affects the way we look at Starbucks right now, whether or not right now is the time to buy Starbucks. And it's buying at support versus buying a stock that has bullish order flow. And it sounds like they're the same trade, but they're not. Nothing could be further from the truth. And stick with me for just 1 second, because we have two advanced topics today. We're going to talk about this topic right now. And I'm going to jump into this conversation that we had in our coaching call last night that somebody had asked. So let's talk about buying at support. When you buy at support, what is the reason you're choosing to accept risk? Why are you buying? And everybody, can you do me a favor? Pop it in there. If you're new to the channel, thank you so much. Hit that subscribe button and the the like button if we're providing value. So I want to ask, pop in the channel here, pop in the chat. Why are you buying at support? What is the reason for buying at support? And this is a really deep subject that a lot of people just don't think through enough. I'll give my answer, which I get all the time when we do our private coaching. John Lash, thank you so much for that. I really appreciate it. Okay, so John Oak says, hope that support holds. Let's see. I just want to pull him back up in here. I hope that support holds. Big money usually comes in at support. High probability stock will go up at support. Now, I want to stick with Simon, and I know Simon's got a strong back, so I'm going to pick on Simon right now because that's the exact wrong answer that I want to highlight today. Okay. All right. Starbucks, 130 target, sold cover. All right. Duncan Dave. Awesome. Buyers come back in. Spot where money has stepped in. Okay. So I'm going to go back up to Simon here. Okay. This is the number one reason that people buy at support. Okay. They believe it's a high probability that the stock will go up from that support level. Now, let's shift that a little bit. What is the best reason in the world for us to choose to accept risk? Before we buy stock, what is the best reason for us to choose to buy stock? Because there's a high probability of our profit target being hit versus our stop loss being hit. Let's put those two things in context, because again, I don't have a post-it pad here today. Every day I want you to have a post-it pad moment. Actually, you know what? I got like giant post-it pads over there. I should go and get them. This is a post-it pad moment. All right. And I want to come back on the screen because it's relevant to this trade right now in Starbucks. Okay. And I'm leaving that one on the screen, just high probability. Okay. Because the stock is going down to support. Okay. That is not a high probability that your profit target will be hit versus your stop loss. It simply means that that's the last spot that buyers stepped in. But that does not mean it's a high probability of moving in your favor. Remember, and this is a great example here, because right in the chat right now, and again, I want this to be participative. I don't even know if that's a word, but I'm going to throw it out there. Is this stock right now in bullish or bearish order flow? Can you look at Starbucks right now and build an argument to say, hey, grandma, I want to take your money right now. Starbucks is the greatest idea in the world because of X, Y, and Z. Is Starbucks in bullish or bearish order flow right now? And by the way, this is the kind of stuff we do every day in the boot camp. So you're getting extra today. Bearish, right? Exactly. So if we just established that the reason we would accept risk is because there's a higher probability of our profit target being hit which in this case is 127, versus our stop loss holding or our stop loss being hit. In this case here, just buying at support, which we can clearly see here is right around the 110 level, it's not enough of an argument for you to put your money in harm's way. So think about what we're talking about right now, because there's a difference between I see this stock moving in my favor and because of X and Y and Z and A, B, and Z, you build that argument to say, that's why I'm choosing to accept risk. That's why I'm choosing to put my first piece of my trade on. So Starbucks, even with the upgrade, needs to be put in context. So remember this. Never, ever forget this. Just because you see support doesn't mean it's a great idea. It means that there's a likelihood of it not getting crushed at that point, but that doesn't mean there's a high likelihood of it hitting a profit target. So how do we translate that into an idea for buying Starbucks right now? Well, the upgrade from Deutsche Bank, that's a pretty big deal, right? So what are we looking for? The minimum criteria is we want to see smart money stepping up, doing something off of this, committing their real money. And at the very least, we want to see the stock have a well-bid candlestick. So what is a well-bid candlestick? Well, we talk about that quite a bit. Zoom this out a little bit. It's this. It's higher highs, higher lows that close near the highs. All three of those things. Higher highs, higher lows, and close near the highs. So now we recognize that we have support in Starbucks, but we have basically 3 months of selling in Starbucks right now. So 3 months of bearish order flow since that earnings came out and since it hit all-time highs. So we're looking for that upgrade to be the first catalyst for this stock to move higher into earnings. So what would be the trade? How would I be going after Starbucks right now? First thing I'd be looking at is to see the daily chart go well bid. Because we're fighting these 3 months of selling, I would only have my initial piece on to be as a part of that argument for the upgrade. We also have part of the argument that there's support there. That would be a level that I'd be looking for that to hold. But that's only my initial piece. So remember we were just talking about in Facebook, where now Facebook is saying push down and a pause, a push down and a pause. So that's an argument for me not to look for buying right now, because right now the smart money is dumping that stock as of this moment. So for Starbucks, in the context of this bigger move with the catalyst and the obvious support level at 110, this would translate into only having a small piece of my position in the context of buying this stock now, looking for it to move. But that doesn't mean I'm buying it today. I need to see smart money stepping up. I need to somebody with really deep pockets hold higher lows, create higher highs, and close it near the highs. And the very reason I'm saying close near the highs, I think everybody knows this, is because of yesterday's price action, where the market was just amazing yesterday morning, and then boom, all the way down to the other side. So remember, there's 3 different parts to that: higher highs, higher lows, and close near the highs. So what are we doing? We are not guessing anymore. We are letting the smart money tell us, okay, I'm dipping my toes in, so maybe you might want to do the same. But dipping your toes in with the right share size at that spot as we learn how to read the tape in Starbucks. So that's how you build arguments all day, every day. We're only looking at one tiny piece of that right now, all right? So I want to get into, let me see. Just want to answer a couple of questions. Let the big money come in and let the sellers sell against that so he can build once we break. Yep, that's one way of looking at it. I just think that it's easier to wait for them to prove that they actually have a higher high and higher low there. Let's see, what percentage of your position is the first portion? That's a really good question. And we in the boot camp, we have a whole calculation for doing all this. I don't want to get into all that detail right now. Very general guidelines, depending on the profit potential of the trade, depending on how long there's been bearish order flow. You really need to know, and this is actually something you probably want to write down too, what stage of order flow are you leaning on? Is it stage 1, stage 2, stage 3? How much order flow is on your side? The stage of order flow should dictate the size of your initial position. That's as much detail as I want to get into on that, because that's kind of something that we teach in a lot more detail in the boot camp. But Jay, that's a really, really good Jay Leno, actually. That's a pretty funny name. All right. So I want to get into some more ideas, but we're going to talk about another stock that Fred Grove in our community yesterday called out. He's been actually trading it a lot, and it's actually popping up into a lot of news stories this morning. And it's this stock, BROS. It's a recent stock that's come out, but actually starting to trade pretty well. And when I say pretty well, it's starting to show some really good volume. And this was just yesterday. So I want to bring up something as well where we get a lot of people who are like, oh my gosh, this market's so confusing. Oh my gosh, this market's beating my head in. It just means that you're not doing enough work. It means that you're not prepping enough before the market opens. It means that you're probably only running scans based on price action and you're not putting volume in there. And I'm going to show you another stock in just 1 second that actually had a really cool move yesterday that doesn't have order flow, but is now in my tracking journal, which I'm going to talk about that in a second. All right. So BROS, I'll give you the full history of the stock. You can see that it's actually not been around that long, only a few months. And if we zoom out on the weekly chart, you can actually see here 1, 2, 3, 5 weeks. Okay. So it hasn't been around that long. And normally I want a little bit more order flow, but what's the number one thing that this stock did yesterday that should make you sit up in your seat and say, wow, I need to pay attention to this stock right now? I'd like to see everybody's answer, if you don't mind. What did this stock do yesterday that we talk about every single day? That's also a part of the reason that we track this every day, which is the sector rotation. What did BROS do yesterday that should be the first scan that you run after the market opens? First scan. What should exactly, Jeremy? Relative strength. Exactly. Relative strength. So this stock not only had relative strength yesterday, but it also had volume. So it had buying pressure and a lot of backup in real capital. So this is a stock, when you're saying you can't find ideas, you need to run, the way we talk about it all the time is running scans and hitting the scans from as many different angles as possible. The daily chart, the weekly chart, the hourly chart, the monthly chart, with moving averages, without moving averages. And then you do that in multiple timeframes. And you start to find ideas that might not be so apparent. And this one here was a really good idea from yesterday. Now, here's the one thing I want to talk about as well. We talk about how the market traded yesterday. Started out like a ball of fire, amazing day trading opportunities yesterday, and then we kind of melted in the afternoon. But this is where sector rotation and industry group analysis comes in. We had Lynn yesterday call out a couple of ideas in the morning in the solar stocks that have not really been in play lately. But when you understand how to scan, when you understand how to have your watch list set up properly, you have stocks that go from your trading game plan into your watch list. And I just want to do a quick lesson, for lack of a better way of putting that, just so everybody has the structure in their mind. So the number one thing everybody should have, if you don't, you absolutely should, is a trading plan. And a trading plan is your edge and your money management. Those are the two biggest things in there, right? But the part of the edge is stocks that meet the criteria. So after you have your trading plan, then you have your trading scans. Okay. Trading scans are done in two ways. Number one, they're done on a sector rotation basis, which again, I show every day. That's actually what we have here, right? Every single day. That's the first thing I do after the market closes. Then we jump into the trading scans. Then from the trading scans, you have your trading game plan. Okay. And from the trading game plan, those are stocks that meet the criteria where you're going to trade them today. So for example, we have a list right now of roughly 20 stocks, excuse me, that are in the trading game plan for today that I gave everybody last night. And then when our meeting starts after this call, we review all of them. We review my ideas, we review everybody else's ideas, why it's a good idea, why it might not be a good idea. But here's the part that a lot of people miss. And this is where trading ideas that are profitable just get lost. And I'm going to talk about this in two different ways. One from a tracking journal perspective and one from a stop loss perspective, which I think you're not going to really think about, but I'm hopefully I could give you like the light bulb moment today. So trading plan, then from your trading plan, you go and find stocks using a trading scan that match your edge. The stocks that match your edge that are tradable today go into your trading game plan. But the tracking journal are ideas that are interesting, but not necessarily trades yet. So you need to have that as a list that if it gets up to a certain level, you have an alert set, you have a buy stop set. And today, one of those stocks that's in my tracking journal, but not necessarily in my trading plan yet, is Win. So if we take a look at Win on a longer term basis, Win clearly has bearish order flow. So the first thing I noticed is Win actually traded bullish compared to how the overall market traded yesterday. Then you keep going a little bit deeper and you start to read the tape a little bit more, and you see that Win had giant volume yesterday as well. So if you remember what we talked about yesterday in Roku, we've also been talking about some other stocks that look like they're bottoming out with the possibility of them starting to head higher. This is one of those situations where it goes into the tracking journal, but now you need to come back to it every day to see if it goes into your trading game plan. So yesterday, Lynn Ramirez in our community has been watching the solar stocks. So we actually had, and I'm going to pull up an intraday chart so that everybody could see. This is where the power of a tracking journal comes in, where a stock might not be that obvious on the daily chart, but for whatever reason in our game planning, we start to look at it like, not yet, but watch it every day. Not yet, but watch it every day. And you start to get these kind of ideas unfolding because you have both. You have your trading game plan for today and your tracking journal of stuff that you watch every day. So make sure you have both of those. So when you're doing your sector rotation, and we're going to get into some ideas in just a second, this is where the power of being prepared puts you in position to get paid. And all of those P's, that was not intentional. But what I want to get across to you is if you're finding the market a little bit frustrating right now, it means that you need to go just one step deeper into your game planning and your scanning. And then take two different lists, what you're trading today or this week, or what you are potentially trading if stocks hit certain levels. Very, very big deal. And to bring this really home, you have your trading game plan and you traded all those stocks today. And now you go into the next day and say, well, that was great. I found it for yesterday's game plan. Should I still be trading it today? That's a giant mistake that traders make, is they traded it yesterday and then they go leave it alone. It's one of the biggest things that we drill in every single day in our morning game plan. Is it a good idea? Yes or no? Why is it a good idea? And is it still valid? Remember, the three pillars are stacking the order flow, tape reading, and risk reversal. That second part, tape reading, is determining if it's still a good trade. And I'm going to show you one stock that we talked about yesterday where I said I'm not initiating a new swing trade, but the trade is absolutely still valid for what we call as a bullish echo. The bullish echo is the stock traveling, gone too far, not a good swing trade at that moment, but we're still looking for the last buyers to step in. And if you watched yesterday's video, which hopefully you subscribed and you got that, this is the idea from yesterday. So Net just produced, and even some new members had an unbelievable day just in the morning, just on this stock. So again, we're bringing this all home from scanning for sector rotation, reading the market, trading journal into a tracking journal, and knowing which stock should go into each one. And we called this one out yesterday. So whether you're in the boot camp with us or not, this is the kind of stuff that you need to do every day. It's easy. I want to tell you right now, it's not hard. It's super easy. You just need to be organized, which is why our game plan meeting prior to the market opening every day, which we have every day at 8:30, it's by far the most important part of the day, because we are getting set up with why something has obvious order flow and whether or not it's a good trade now. It's both of those things, not only one. But then you take it a step further. Is this a longer term position trade, or should I just be looking to day trade it today? Those simple steps: order flow, yes or no? Yes. Tape reading, yes or no? Yes. Day trade or swing trade? Day trade because of this, swing trade because of that. Once you go into the day where you go from trading plan to scan right down into your game plan, you basically wait for the day to open and your whole day is scripted. So I hope I'm inspiring you to carry forward your list from one day to the next and still beat those stocks up. The way that we talk about it in the boot camp is if it's a broken ATM, stay there. And you can see, just in case you haven't been watching Net, you can see right here, this is what Net has done over the last week and a half. So that's kind of been a broken ATM where it keeps making higher highs, higher lows, and punching through to new levels. So today you can see there's a little bit of profit taking, but the stock is still as a opportunity to have in your watch list today. Now, after the market opens, you still need to have criteria of which stocks meet the criteria where today's order flow matches the longer term order flow. And that's the secret of really setting up your watch list properly with the right columns, so it spits out to you right now, these stocks are buys and these stocks are buys right now. Because remember, you could have a list of stocks that go into your game plan that you're like, yes, I can't wait to buy these stocks, but they're trending down the whole day. BofA, for example, yesterday, good longer-term play based on the Charlie Munger news that we announced yesterday, but there weren't any opportunities yesterday. So it was in the game plan, but we didn't trade it because the order flow today didn't match the longer-term order flow. So think about it. Order flow, yes. Market opens, order flow now? No. Leave it alone, go to the next trade. It's literally that simple, all right? So as promised, I want to go over some stocks that we have in the watch list for today based on some opportunities from the sector rotation. And we are specifically going to focus on technology and consumer cyclical because these actually have broken up into easier setups right here. I just want to answer this question. With the boot camp, will you have access to the online course after 30 days? If you choose that, yes. If you choose that on the checkout page, yes. All right, let me see. Rowan, you are saying you trade both turns and momentum like a scalp? No. No, I want to be clear about that. I do not scalp. I do not trade penny stocks, and I do not scalp. The way that I teach and the way that I trade is we do everything based on order flow, and we actually have kind of a pretty relaxing day. If there's something obvious, we get in there and we look to maximize the profits. We're not getting in, getting out, getting in, get out. I have enough gray hair. I don't need to be scalping like that anymore. We're really looking for, we're not trading. Actually, you know what? Here's probably the best way to describe what we do in the boot camp. We're not trading for pennies. We're trading for dollars. That's probably the easiest way to explain it. So because everything starts on the bigger picture, we're not looking for that next quick move. We're looking for the next move. And then as it reaches and moves up towards profit targets, we shift into what we call the profit maximizer to hang on to those trades as long as possible. But I want to get into some ideas. I want to show everybody some stuff that we're looking at today, which we're going to start out with technology stocks. Energy stocks kind of took a little bit of a pause yesterday, so we're going to shift over into these two, specifically technology and consumer cyclical. We'll actually start out with consumer cyclical right now because I want to give everybody some solid ideas to consider heading into today. And eBay is actually going to be one of those stocks that's on the list. eBay actually had a really nice $5 rally, and you can see how hard we've been working the charts. It broke down and has now held up and did not really sell off with the rest of the market yesterday. So just to be clear, I am looking at eBay over 75, okay? We already just talked about BROS, which is a relatively new stock. And again, just to give you some confirmation of what it did yesterday, it's 42 and change and $7.50 rally yesterday. So that's something that we're going to be keeping an eye on as well today. So these are what are called consumer cyclical stocks, all right? Win, we just mentioned before. Now it's in our tracking journal. We're looking for this order flow that came in there yesterday to show us that it has another day left in the tank. And you can see over here, it's actually up another $1.25 pre-market. We also recently mentioned General Motors, which has actually been a really good push and a pause, a push and a pause, a push and a pause, a push. And now in a pause, we're looking for this to now start moving towards 64. Moving on over into the technology stocks. So again, just want to give everybody clear where it's coming from. Now we're watching technology stocks work their way up the list. So we're going to be focusing, rotating into technology stocks. And at the top of the list right now is a relatively new one as well, AEHR. So you're starting to see now how we are not guessing which stocks we should be focusing on. We're not guessing at all. It's like, learn how to scan for the order flow, learn how to translate order flow into trade ideas, and then those trade ideas either go into your game plan or your tracking journal. AEHR, again, what did this stock do compared to the market yesterday? Really solid relative strength. So now it's in the game plan for today. AFRM, which has been a very strong stock over the last couple of months, so to speak, starting with this big bullish gap. We already mentioned NET. APPS is another stock that we're looking to see get above 80, and then we're looking for it to make a run towards 100, quite honestly. So this is another one. You can see it's actually up a little bit, but it's trading right at that $80 breakout level. All right, so we're going to work our way into some other ones. DQ, this is an example of where it's not ready to go yet, but order flow stepped up yesterday and had relative strength on a day that the market was weak. So just a quick question. Looking at this stock right now, DQ met the criteria for order flow from yesterday, but does it have longer term order flow? No, this is the start of something in this stock. So this stock would not go into my longer term trading game plan. This would go into my tracking journal. There's a possibility I would day trade it today, but I'm not looking to swing trade it because it's only 1 day of order flow. So you can see how stocks go from the scan. Then you make a determination of whether they're a day trade or a swing trade, tracking journal, or trading plan. So the trading plan is what we look at today. So again, this is what we do in our 8:30 meeting before the market opens for the boot camp. And that's probably the most important part of the day because we're really getting in the right mindset. We're saying this is a good idea, why and how, really. Let's see. Hey, Andre, how you doing? Good morning. Thanks for joining us today. Okay, so I just want to go into a few more so everybody has some ideas. Coin has rallied quite a bit recently with Bitcoin. And you can see here, really nice bounce off the lows. Yesterday, it's a good order flow. Pulled back a little bit with the rest of the market, but has some room to go up to 280. And let's see. Run was another one in the solar sector that we were watching yesterday. And you can see, again, still has this longer-term move to the downside. So, again, let's be very clear about this stock. Yesterday, it woke up. Today, it's in my tracking journal, possibly a day trade, but not a longer-term trade because it still has that 3 months of selling. So I want to make sure, I want to keep going back and forth and giving some good ideas. Let's see. Hey, Elliot, good morning. Thanks so much for joining us. Good morning, Chuck. Yep, Charles, absolutely. DQ is in a box right now. All right. So we're going to go over into a couple of more. I just want to make sure that everybody has a few ideas to take a look at today. Mara, which we obviously should be talking about Bitcoin. Mara's coming into a little bit of resistance here at 44. And you can see that it's basically going to open up a little bit tighter right now. So this is something that is still going to be a day trade for me right now, but I really need to see it get above 44 before it becomes a little bit of a bigger move. Let's see. I just want to make sure I say hello to everybody. Nate, thank you so much. I really appreciate that. That means a lot to me that somebody who's been through the boot camp is actually saying that it's good. We pour a lot of work into it. Hey, Dean, good morning. Okay, so Mara, you can see here, this is in the trading game plan, but you have to obviously be aware of the 44. And one that we want to talk about here is MRVL. MRVL broke out to all-time highs. And you can see that here. Let me just adjust that so you get a really good picture. Broke out. Look at it here. And now is trading into what is known as a pretty clean bull flag in one of the stronger sectors. Now, here's something that I want to point out here in a big way. So if we're taking a look at Marvel right now, so there's a couple of factors. Remember, we're talking stacking the order flow, stacking the argument for choosing to take risk, right? So if we look at Marvel, it's awesome that it took off and made new all-time highs, right? Now I want to ask you a question. How much order flow are you leaning on? How much commitment was made by smart money and how long has that commitment been? Well, if you really look at this stock right now, it had 2 days of exploding into all-time highs. But prior to that, we were basically in a 4-month trading range. So how does that affect position sizing on this idea? We're only trade, even though it's all-time highs, which is just one surface lazy level of saying, I love this idea, it's only 2 days. But because smart money is only in there for 2 days, that's going to affect my position sizing in this idea. So I'm going to have a little bit less position size on my initial trade. And then I'm looking for smart money to step back in to give me more conviction to size up. And I want to leave you on something from last night. This is something that's really, really cool because it's kind of an advanced thing that I want to talk about, which is this. And I want to zoom this in from yesterday. Okay. This is from our coaching call from last night. And someone asked the question about stop losses. And essentially the question was, if you're in a trade and it goes down to where it trades through your stop loss, should you wait for it to close below that level before you get out? Or should you get out as soon as it hits the level? And I kind of went off on a little bit of a excited rant. Hit your stop loss, get out. Manage the downside, respect risk, and you can always look to get back in the trade. And if you're a regular subscriber of the channel, you know how big we are on set an alert or setting a buy stop back in at the price you'd want to get in. Because remember, getting stopped out does not invalidate the idea. It could still be a great idea, but you need to get in the habit of, if I get stopped out, first, where would I get back in? Second is, where do I make that money back? That should be your first answer. If you get out of a trade and you're like, oh, crying, oh, market makers are out to get me, algorithms are out to get me, stop. Stop doing that. As soon as you get stopped out, ask yourself immediately, do I still like the idea? Set an alert. If I don't like the idea anymore, go make it back in something else. But here's a really advanced thing, okay? Here's something that's really advanced. And I'm going to come back on the screen because it's that important. Let's say, for argument's sake, you have 1,000 shares. Well, let's even say 500, just as an example. And you like the idea. The stock has good order flow, rallies up, and you get one of those candles that spikes down and takes you, or is about to take you out of the trade, right? But you love the idea. The order flow is great. The market's good. The sector's good. The industry group is good. You just had that one push to the downside. And let's just say you have 500 shares. So you just built that argument. You really love the idea. And you're like, I don't want to get stopped out because I love the idea, right? You don't move your stop loss. Let's be clear about that. You have to accept risk. If you put your stop at an area where you said, I don't believe this is still a good idea to hold full share size if it cracks that level. So you already built that argument. You accepted the risk. If it goes down, you're like, I know I'm going to do the smart thing because I'll just go make it back. I'll find order flow somewhere else or set the alert. But here's the advanced thing that I want you to write down. Again, this is a post-it pad moment. Reading the tape is easiest when you're in that position, right? Nobody knows better than you if the stock is fluctuating up and down, up and down. Oh, it's going strong. It's pulling back, right? Here's the thing. If you have 500 shares and that stock is moving against you, you're like, man, I love the idea. Don't get out of the whole thing. Go from 500 down to 100. Reduce your risk profile, but maintain a small position. So it's still in your position summary and you're watching stock now. You know, it went up. You're up 50 cents. It came back 25. You're now up 75 cents and now you're positive. That stock caught a bid again, and now you could look to add that position. So there's 3 different ways to manage it. Scale back, get out, or set an alert. One of those 3 ways of doing it. I really hope that helps you today, and you might want to watch that part again because it's a big deal. You're not giving up on the idea. You're doing what's smart is you're reducing your risk exposure until either the stock confirms it's not going anywhere or it finds a bid. Maybe it was just that one candlestick that rushed down and then comes back. I mean, raise your hand right now. How many trades have you seen, both day trade and swing trade? How many trades have you seen where you had them? You had that big hook. You had the well hooked, comes down, spikes you out, and then 3 days later, the stock's up $10. We've all been there, right? This is how advanced traders handle that. They don't get out because they love the idea. You scale back, and then you look for a spot to put those shares back on. If it doesn't recover, no big deal. You just reduced your exposure by 80%, but it's better to read the tape while it's in your position summary than just watching it in your watch list because you have a little bit of, even if it's 50 shares, it doesn't make a difference. You know that stock better than it because your heart is going up and down because of that trade. All right. All right, everybody. We actually have to, Simon, exactly. I just want to put that in there. Stop losses stops you from blowing your account out. Exactly. 100%, Simon. Absolutely. All right, everybody. I actually have to head out. We have to get ready for our game plan meeting with the bootcamp members and our mastery members. So thanks so much for joining me today. I really, really appreciate it. It means everything to me. If we provided value today, please do me a favor, smash that like button and hit the subscribe button so you know when the new calls are coming out. Every day, 7:30, Monday through Friday. Have an awesome day, everybody. I really appreciate it. Take care now.